Hello, crypto family. In my last video, I spoke about how a combination of two factors is contributing to a potential sell-off in Bitcoin. The first factor is ever steadily lower highs. You see, guys, lower highs indicate general market weakness. And as you can see in the chart, Bitcoin has been making lower highs since December of last year. The second factor is that the support at the 5,700 to 6,000 level has been getting tested and retested and retested over and over again since November. So far, it's been tested 5 times, and it looks like another test may be on the horizon very soon. Well, today, friends, I'm going to introduce another metric many folks use to help forecast asset prices. Allow me to introduce my next guest, Bitcoin short seller volume. He can be found on tradingview.com all day, every day. As you can see on the chart, the crypto exchange Bitfinex has been tracking Bitcoin short seller metrics since last August. So by now you're probably wondering, why on earth should I care about short seller behavior? Well, here's why. Check out the chart on your screen. Okay, actually, this is 2 charts. On the bottom of your screen are the daily metrics of short seller behavior from the Bitfinex exchange going back to August of last year when they began collecting data. On the top of your screen are the Bitcoin prices corresponding to this short seller data. I want you guys to notice something. Notice that in mid-April and in mid to late August of this year, there were spikes in short seller volume. There was more short seller volume at these 2 times than at any point in history. Now, look up at that top chart. Look at the Bitcoin chart and tell me what you notice. What do you notice corresponding with those huge spikes? Well, you'll probably notice that when short seller volume is at all-time highs or even near all-time highs, Bitcoin prices bottom out. They've been bottoming out near the 5,700 to 6,000 level. And if you look carefully, you'll even notice that the slow march towards extreme highs in short seller volume correlate very, very strongly to pullbacks in the price of Bitcoin. Well, guys, I got news. This short seller behavior I've been talking about is a type of sentiment indicator. It's an awesome tool for measuring investor fear because it reflects what investors are actually doing with their money. Okay. One last thing. The last thing I want you to notice about these 2 charts is the most recent 10 to 20 days. Do you see how volatile short seller volume has been? 1 minute, it's near all-time highs. Then it pulls back suddenly to its usual average volume. And the minute Bitcoin shows any weakness, short seller volume spikes right back up to near all-time highs. Do you see that? Do you? Good. There is a definite relationship between the Bitcoin price and extremes in short seller behavior. So guys, I said all of that to say this: investors, traders, market participants, these folks are scared. They're sitting on the edges of their seats, anticipating a sudden drop in Bitcoin prices. I mean, why else would short seller volume spike so ferociously given the relatively small dip in Bitcoin prices? You know, in my opinion, Bitcoin prices right now are a lot like this guy right here, the one who's about to get punched. And pow! Ooh-wee! Down he goes. Yeah, just look at him. He has absolutely no clue where he's at. He's like, am I at the grocery store? No, I must be at the zoo because this guy's an animal. Yeah, poor guy. As you can see, I've been making a case for why Bitcoin prices could drop further. And now I would like to tell you of one way you can profit from it. The natural thing to do is to short the market. So, where can you do that? Here on the website bitmex.com, which was co-founded by this guy, Arthur Hayes, who is currently the CEO. BitMEX is the largest crypto derivatives exchange in the world. And that's interesting because derivatives allow us to go long and short, meaning we can profit if the market goes up or down. Not bad, eh? So in a nutshell, going long or entering a long trade means that you're bullish and will profit if prices go up. Whereas going short or entering a short trade means you're bearish and will profit if prices go down. Now, back to BitMEX. I would like you guys to check out that red circle with the red number 1 on your screen. You want to click that button in order to short the market. Now, notice the blue circle with the blue number 2 on your screen. This is a list of crypto assets you can short, sell, or long buy. And lastly, check out the yellow circle with the yellow number 3. This is for leverage. Leverage can be phenomenally awesome, but 95% of the time, it's dangerous. Very, very dangerous. Leverage is the single best way to get wrecked in the market. Leveraging derivatives is why Lehman Brothers, which used to be America's oldest investment bank, went bankrupt a few years ago, back in 2008. Be very careful with leverage. Oh, yeah, and one more thing. In general, if you want to go long, just buy the asset. Don't go to BitMEX. You see, BitMEX is great for shorting the market and occasionally using leverage when you feel it's to your advantage to do so. BitMEX is good for cashing in on short-term predictions. Now, one last thing before I go. Guys, I do not have a crystal ball, and I don't know what Bitcoin will do next. I am merely speculating. Do I think there's short-term market weakness? Oh, yeah. I believe there's a mountain of technical and fundamental evidence pointing at a short-term knockout. But I could be wrong. For all I know, the market could consolidate in this 5,700 to 6,000 range and blast right off to 80,000. So you gotta do your own research. Well, that pretty much concludes the videos, guys. I hope it was informative. I hope you learned something useful. I hope. Be vigilant. Be prosperous. And, as Steve Jobs used to say,
stay hungry, stay foolish.
See you next time.